Hello. If you are over 65 or you have a parent who is, there is a refund sitting on the table every single year that almost nobody claims. Not because it is hidden, not because it is illegal, but because the tax software you use never asks the one question that would unlock it, and the accountant doing your taxes in 15 minutes never has time to check. Today I am going to walk you through exactly what this is, why it exists, and how much it could actually put back in your pocket this year. Stay to the end because the second half is where I show you a benefit that stacks right on top of this one, and most people don't even know the two can be combined. Let's start with the simple truth. The tax code treats you differently once you turn 65, not as a favor, not as charity. It is written into the law itself because lawmakers recognized decades ago that older Americans often live on fixed incomes, and a flat tax system hits a retiree on Social Security very differently than it hits someone still earning a paycheck. So they built in an adjustment, and that adjustment is bigger than most people assume. Here is the first piece. Every year, the IRS gives every taxpayer something called the standard deduction, an amount of income that is simply never taxed at all. But once you turn 65, before the tax year ends, you get an additional amount added on top of that automatically, just for your age. For the 2026 filing season, that extra amount is over $2,000 for a single filer. And if you are married and both of you are 65 or older, that additional deduction roughly doubles. That is not a credit you have to apply for. It is not a form you have to fill out separately. It is a box you check, one single checkbox on your tax return. And here is the part that should genuinely bother you. Studies from tax preparation groups have found that a meaningful share of eligible seniors either don't check that box or their preparer misses it, because the software auto fills based on birth date fields that sometimes don't sync correctly with state records. One missed checkbox and that money simply evaporates. It doesn't roll over. It doesn't come back next year. It is just gone. Now let's talk about who actually needs to file at all, because this trips up more retirees than anything else on this list. Many seniors assume that once they retire, they are done with taxes completely. That is not true, but here is the part that works in your favor. The income threshold before you are even required to file a return is higher once you're 65, again built directly into the law. Which means some retirees who technically don't have to file skip it entirely, and in doing so, they walk away from a refund that was waiting for them, because withholding from a pension, from part-time work, from investment income, doesn't know your age. It gets taken out regardless, and if you never file, you never get it back. Filing a return when your income is under that threshold isn't required, but it is often the only way to actually collect what was already taken from you throughout the year. This is why so many seniors leave money behind without ever realizing it happened. It's not one dramatic mistake. It's a series of small, quiet ones. A box left unchecked, a return that was never filed because someone assumed it wasn't necessary, a form nobody explained clearly. Now, here is the second piece of this puzzle. A specific tax credit built exclusively for seniors and people with disabilities, one that can be combined with everything I just described. It's called the Credit for the Elderly or the Disabled, and it has existed in the tax code for years, quietly, mostly unused, because almost no tax software prompts you to check for it, and almost no preparer brings it up unless you specifically ask. Unlike a deduction, which only reduces the income the IRS taxes, this is a credit, which comes straight off your final tax bill. That distinction matters enormously. A deduction saves you a percentage. A credit saves you the full amount, dollar for dollar. Here's how it works. If you are 65 or older, or if you're younger but permanently and totally disabled, and your income falls under certain limits, you may qualify. Now, the limits matter here, and I want to be straightforward with you rather than oversell this. This credit is targeted at retirees living on more modest fixed incomes, generally those relying primarily on Social Security, a smaller pension, or limited retirement savings. If your total income is above the threshold set for your filing status, you won't qualify, and that's by design, because the credit exists to support the retirees who need it most. But if you do fall into that range, the credit can be worth several hundred to over $1,000, depending on your filing status and exact income. Here's the detail that trips people up. The IRS has a specific worksheet for this credit, Schedule R, and it requires you to calculate your adjusted gross income alongside any non-taxable Social Security or pension income you received. It's not complicated, but it is a step most basic tax software skips over unless you specifically search for it by name. That's the whole problem in one sentence. This isn't hidden from you, it's just never surfaced unless you know to look. There's one more piece worth mentioning, because it often gets confused with everything above. Seniors who itemize instead of taking the standard deduction may also be able to deduct medical and dental expenses that exceed a certain percentage of their income. And for retirees managing ongoing prescriptions, doctor visits, or long-term care costs, that threshold is often reached faster than people expect. It won't apply to everyone, since most seniors are better off with the standard deduction plus the age addition. But if your medical expenses were high this year, it's worth having someone actually run both numbers side by side instead of assuming. So here's what I want you to walk away with. None of this is a loophole. None of it is a secret code buried somewhere the IRS doesn't want you to find. It's written directly into the tax law, built specifically with retirees in mind. The only reason it goes unclaimed year after year is that nobody sits down and explains it clearly, and rush tax software fills in the minimum instead of the maximum. If you or someone you love is 65 or older, do one simple thing after watching this. Before you file, or before your preparer files for you, ask directly, was the extra standard deduction for my age applied, and was I checked for the credit for the elderly or the disabled? 2 questions, 30 seconds, and potentially real money that was always yours to claim in the first place. I'll see you in the next one.